Filing a W-2, the step most parents skip. Should I file a W-2 for my child? It's one of the first questions parents ask after they decide to legally hire their kid through their business. And the moment they hear, "You don't have to," it's not required by the IRS, they breathe a sigh of relief and skip it entirely. Why? Because most parents are afraid of doing it wrong. They're afraid of triggering taxes, waking up the IRS, and getting audited over one little form. And technically, they're not wrong. The IRS doesn't require a W-2 in certain situations. Let me explain. If your business is a sole proprietorship or a single-member LLC taxed as a sole prop, and your child is under 18, the IRS gives you a beautiful break. No Social Security, no Medicare, no FUTA, and no federal withholding required. You can pay your child, deduct the wages, and not file a W-2. But just because something isn't required doesn't mean it isn't smart. If you're building wealth, not just getting deductions, there's a better way. Filing a W-2 for your child, even when payroll taxes aren't required, does three powerful things. 1, it creates legal proof that your child earned wages. That's huge. It confirms the income came from real work, not a gift or allowance. 2, it documents earned income for Roth IRA eligibility. The IRS says you need earned income to contribute to a Roth IRA. Filing a W-2 makes that crystal clear. 3, it shows the IRS and your accountant that you're playing by the book. You're not hiding anything. You've got records. You've got transparency. Think about it. The child earned the money, did the work, and you want them to invest that money in a tax-free Roth IRA? Great. But if you don't file a W-2, how are you proving they earned it? Now let's get practical. If you're like most parent entrepreneurs, you don't want to set up a whole payroll system just to pay your 11-year-old to edit videos or stuff mailers. Good news, you don't have to. You can still file a W-2 without using traditional payroll or triggering unnecessary taxes. Here's how. Instead of treating your child like a formal employee in a payroll service, you treat their payments as outside labor or cost of goods sold, depending on the work they're doing. If your child earns income, and you can prove it, they can contribute up to $7,000 per year into a Roth IRA in 2025. And because their income is so low, it's all after-tax money anyway, meaning every dollar they invest now grows completely tax-free for decades. No tax on the gains, no tax when they take it out. Try finding another tax break that's sweet. But remember, you can't contribute unless your child has documented earned income. And what's the cleanest, most audit-proof way to prove that? A W-2. So, let's review. If you're a parent with a business, you have a rare opportunity. You can pay your child, deduct the wages, and skip payroll taxes. But if you're thinking long-term, don't stop there. File the W-2. Use it to prove the wages were real, qualify your child for a Roth IRA, and build audit-proof records that support your legacy-building goals. Download the free checklist below to get started. And if this helped you, hit that subscribe button so you don't miss the rest of the series. Disclaimer. This video is for educational purposes only and does not constitute legal or tax advice. Please consult with a qualified tax professional to ensure compliance with IRS rules for your business type and family.